It's Brian Preston, the money guy.
Michelle has a question for you guys. Giving is a major part of our finances, she says. There are tax-advantaged ways to give significantly upon death, but how do we give as much as possible yearly while we're living?
So one, Michelle, I love that. If you've done our financial order of operations course at learn.moneyguide.com, you'll know that one of our ground rules, one of our step zeros is generosity. We all, I think, can remember different parts in our life where someone or some entity or something was generous and it allowed an opportunity for us that maybe did not exist previously. And so one of the things we get to do as we have success is give back and pour that back into the world and the people around us, which I think is awesome. But just because we're charitably minded and we want to be generous, we want to give, doesn't mean that we have to do it inefficiently. And so your question is one we often get because somebody might have a big income year. They might sell a business, sell a piece of property, sell a piece of land, and they want to make large charitable contributions or they want to make a big contribution. I'm going to tell you the first thing to watch out on because we've seen this happen before in the past. You want to make sure you understand how the tax code treats charitable contributions because you may be surprised to find out that not all of your charitable contribution may be deductible if you give too much. It's only deductible up to a certain percentage of your income. I want to say, and I'm going off memory here, Taxman, you can correct me if I'm wrong. If you're gifting cash, I think you can only take a deduction of up to 50% of your income. And if you're gifting property or like appreciated securities, it only goes up to 30%. So you want to make sure that maybe you got a big inheritance. And from that big inheritance, you want to give a big charitable gift. Be careful not to give too much in 1 year or else you might not be able to get that deduction. You may want to stagger your gifting over a number of years so that you can take advantage of that deduction. Now, Brian, save that. Save the scenario where someone wants to give a big annual gift because of something big that happened. What are some ways that Michelle can give very generously in a large way on an annual and ongoing basis?
Yeah, Michelle, I love this question. I wrote down 3 big things on it. I will tell you that I hate that there is this perception that there's more opportunity when you die. Because I think if you can be generous while you're alive, you get to enjoy a heck of a lot more of seeing the fruit of your essentially your blessings and resources out and about instead of waiting until you die. So I encourage you, because there are plenty, the government does encourage you to give while you're still active. You don't have to wait until death to be generous. And that's why we make it step 0. It's actually part of the ground rules of the financial order of operations because we want you to be generous throughout. I wrote down 3 things because this is what Bo is alluding to. Number 1, appreciated assets. If you have appreciated assets, you've been investing, you've been successful, you're blessed with the fact that your fruits are growing, then you should pay attention to those appreciated assets because the government gives you a win-win opportunity in the fact that you could not only give money to charities of these appreciated assets, they get to take the full fair market value at the day you give the contribution. You don't have to pay income taxes on that gain. So you get to actually skirt paying the income taxes. So if you bought something for $10,000, now it's worth $20,000. I used to give Tesla as the example. That's kind of gone down the drain a little bit. But seriously, there's lots of equities long term. And even if it was Tesla, maybe if you bought it in 2018, you still are up like 400%. Sure. So Elon, don't get mad at me. But it is one of those things. If you have appreciated securities, you could put the money in. And you don't pay, so you put $10,000 in, it's that $10,000 of gain because the charities go get the $20,000 benefit. You're not going to pay income tax on that, and you get the full charitable deduction on your tax return at the $20,000 at the higher fair market value. That's a win-win. Now, a lot of people, if you're a tither or you're a person that wants to give on a consistent basis, I think you can turbocharge this strategy. This is financial mutant territory here in the fact that what you can do is if you are going to give consistently, you can give out of those appreciated accounts, but then you can also, instead of if you were giving cash naturally to these organizations, you can now have that money go back into your investment account that you just gave out of to replenish the investment and buy right back into a lot of these securities, because what that does over the long term, it allows you to replenish your assets to keep growing. It also is pushing your basis higher. So in case you had an emergency or an investment opportunity of a lifetime, you actually have easier access to your money. But pay attention, step 1, if you have appreciated assets. Number two, what are your long-term plans? Because if you are a person that you know that this is very important, and you do have appreciated assets, you can start focusing on the why of what you want to do, because just like retirement's a big goal, if you have big aspirations with your charitable giving, and Bo, I'm not going to put you on the spot, but I know I've always been impressed. You've told me, like, I know you've had thoughts about seeding churches. Sure. You've had thoughts about doing, and that's built into part of your plan.
Absolutely.
I think that having that long-term mindset is tremendously valuable. And then there is a next level. Just like we talk about, take the relationship to the next level. When you're trying to figure out, can I stress test my retirement? Can I make sure I'm optimizing? I've only retired once. You guys have retired people thousands of times. It's the same way with next level type of a charitable giving, because there are CRATs. There's all kind of funny acronyms that you can use. We're not going to cover that in a podcast or YouTube, because guess what? There'd be 6 of you who'd watch it. But it is something that once you graduate to the next level, there are ways that you can do this in an even more turbocharged way that we try to help clients with.
Now, and I do just want to throw one other thing out there, because we are getting close to tax time. When you go to do your tax return this year, if you are someone who's charitably minded, I want to look at what you gave last year. And I want to make sure that, did I get to take full advantage of the deduction? Because the standard deduction now is so high.
Yeah.
A lot of folks, maybe I'm going to make up a number here. I give $10,000 a year to charity as a married couple. But when I look at that $10,000 and I add my SALT taxes to that, and I look at the other things, that my mortgage interest, I'm just right at that standard deduction limit, or maybe I'm even a little bit below that. A really interesting planning idea is, maybe instead of giving $10,000 this year, what if I save that money up and I give $20,000 every 2 years? You're going to be able to capitalize on getting a greater tax deduction from bunching your contributions than from doing it each year. So it's just something to think about when you're looking through your tax return, a way to optimize and make sure you're getting the biggest bang for your buck from a tax standpoint.